Well, time to have a look at the markets now. A stock rally paused in Asia along with U.S. equity futures as traders continue to monitor the economic impact of the COVID-19 flare-ups that we are seeing. Look at what's happening with the individual bourses. The Nikkei up 0.5%. Out of Japan, we had the export numbers that came in higher than expected. But when we look at what's happening in Hong Kong, the Hang Seng Index coming in 0.25% lower. Mainland Chinese markets closed higher in their final hour of trade. Looking at what's happening in Europe, we're seeing stocks on that front rise, and this is as investors continue to monitor U.S. earnings and the momentum on the U.S. side of things. Of course, elsewhere, traders continue to monitor the ongoing political talks resulting from that bipartisan infrastructure deal worth about $579 billion that President Joe Biden has brought in to basically pump in a little bit more of a fiscal injection into the U.S. economy. But to talk to us about some of the themes playing out globally as well as locally, we are joined by Chantal Marks from FNB Wealth and Investment. Chantal, thank you so much for your time. Let's check in on the JSE at this particular point. What do you make of its performance right now?
So we've had a very reasonable start to the day. Markets pushed higher really nicely up until just before 11 a.m. And it's kind of flattened out a little bit now, but still close to 1% higher. The overall bourse is trading close to 1% higher. It really is being led by some of the larger cap stocks. The top 10 largest stocks on the JSE all positive today. The top 40 up in excess of 1%. And within that stable, the resources stocks doing particularly well. One of the standouts for me from SENS today was just Mr. Price with a new update on how it's been impacted by the unrest that we saw last week. They said that they had damaged, or they initially said they had damage to 111 stores, which still remains the case. There hasn't been any additional issues for Mr. Price. At one stage, 500 of their stores were actually closed as a precautionary measure, and for now, only 20 remain closed. So a big improvement coming through there, and certainly something to be quite hopeful about.
Yeah, we did see a lot of those companies come out with updates to let us know the extent of damage that they did experience. While we're on the theme of, the riots from last week, on the back of that, has that made you, revise your economic growth outlook in the wake of the cost of damage that we are starting to see come through, especially from KZN and Gauteng?
So we had a very close look at what our estimates look like, particularly for this specific quarter. And we have a lot of fact built in because it was going to be quite a weak quarter anyway, specifically due to level 4 lockdowns, and also because we had a very strong quarter last quarter. So sequentially, there was just going to be a bit of a base impact there. So for now, we haven't actually adjusted those forecasts. It seems as if it was actually quite contained to the provinces that you mentioned, less of an issue in Gauteng, really. And these companies that are coming out with updates are indicating that the response has been quite quick in terms of cleaning up the mess, opening up shops, diverting supply chains, and just adjusting to temporary problems that they're facing, specifically in KwaZulu-Natal. We also have the Durban port reopened, and according to reports, it had a record day yesterday in terms of containers processed. And we've got the N3 open as well as the railway corridor. So for now, we're not making those adjustments. I think what's going to be quite interesting is to see if this has a prolonged impact on business and consumer confidence. So we could see an impact on economic growth going forward as a result of this.
So let's move things stateside. When you look at the U.S. 10-year bond yield, how are you interpreting where it's at right now?
So a lot of heads have been scratched globally as a result of this, because the 10-year yield really has moved, or yields generally have moved out of kilter with what sentiment is generally over the last couple of days. So for now, I'm actually, again, not reading too much into it. I think that it could just be a temporary correction because yields have come down quite substantially since the start of the month. And I also picked up that there's quite a bit of options trading on US Treasuries at the moment. Of course, derivatives trading generally can have strange impacts on the way that these instruments move.
All right, so we had Netflix publish their results. Any standout features from that financial statement?
Yeah, it was also quite an interesting report. So this was also, again, going to be quite a weak quarter for Netflix, just because if you take your mind back to the same quarter last year, so that is from March to June, you had a situation where people were locked into their homes, they were subscribing to Netflix, they were streaming every day, and at the same time you had Netflix actually not producing anything new. So what you have at the moment is that subscriber additions are disappointing a little bit, and I think that is a function both of people being less at home, particularly stateside and in Europe, and because they weren't actually investing a lot in content last year, or they couldn't invest a lot in content last year, perhaps not enough coming on stream at the moment to satisfy consumer tastes. Netflix does expect this to improve over the next few quarters as the base becomes less of an issue, and because new content is expected to come online pretty soon. I think there's still reason to be quite positive around the stock. Streaming continues to pick up in prominence globally, and it doesn't really show any sign of slowing down, especially over the longer term.
All right, Chantal, thank you so much for your time. That is Chantal Marks, who is from FNB Wealth and Investment. Of course, tomorrow we are going to be talking about what to expect from Twitter's numbers. They are coming out, Twitter and Snap. And we also have that ECB rate decision, and we'll keeping you updated on what's happening on that front. We're going to take a quick break, and then when we come back, we'll have more news for you.